Hi friends, welcome to All About Accounting. Today we are going to continue with the topic Accounting for Partnership Basic Concepts. If you have not watched our previous videos on this topic, please do watch it before you proceed with this one so that you will have a better grip over the topics taught today. I am giving the link of the playlist in the card above. If you have not subscribed to our channel, please do subscribe and press the bell icon to get instant notifications. Please do share this to your friends for whom this may be useful. Let us get into the topic. At the end of the first video on this topic, we saw that there are few special aspects relating to partnership accounts. In this video, we are going to learn about the second aspect, that is distribution of profit among partners. When the partners carry on business, they earn profit which they share between themselves in the agreed profit sharing ratio. If there is no agreement between themselves, they share the profits equally as per the law. In case of proprietorship firm, you may know that the profit earned by conducting business is directly transferred to the capital account of the proprietor. But in case of partnership, there are few adjustments which need to be made before transferring the profits earned to the partner's capital account. Now you may have a doubt. What are the adjustments that need to be made to the profit earned? Well, the adjustments to be made includes interest on drawings, interest on capital, salary to partners and commission to partners. In order to make these adjustments, we need to prepare a separate account called the Profit and Loss Appropriation account, where we do all the adjustments and arrive at the final profit which needs to be distributed to the partners. So, soon after preparing the Profit and Loss account of the firm, we will be preparing the Profit and Loss Appropriation account. This Profit and Loss Appropriation account starts with the profit or loss from the Profit and Loss account, where we do all the necessary adjustments and arrive at the profit that need to be distributed between the partners. Therefore, Profit and Loss Appropriation account is a mere extension of Profit and Loss account. Now, let us learn about the journal entries for preparation of Profit and Loss Appropriation account and making the various adjustments through it. The first entry is to transfer the balance in the Profit and Loss account to the Profit and Loss Appropriation account. As we already saw, Profit and Loss Appropriation account is an extension of Profit and Loss account. So, the balance of Profit and Loss account needs to be brought to the Profit and Loss Appropriation account as opening figure. Therefore, the entry for transferring the balance is as follows. There are two possibilities available. 1. The Profit and Loss account shows credit balance, that is, the business has earned net profit. 2. The Profit and Loss account shows a debit balance, that is, the business has incurred a net loss. In case of net profit, the entry is Profit and Loss account debit to Profit and Loss Appropriation account. In case of net loss, the entry is Profit and Loss Appropriation account debit to Profit and Loss account. By passing any one of this entry, we will be transferring the balance in the Profit and Loss account to Profit and Loss Appropriation account. Next, we need to learn the entry for interest on capital adjustment. For allowing interest on capital, the entry is interest on capital account debit to partner's capital or current account, which needs to be credited individually. Here, based on under what method we maintain our partner's capital account, the entry varies. If we are following fixed capital method, we will be crediting partner's current account, and in case we are following fluctuating capital method, we will be crediting partner's capital account. I have explained the concept of fixed and fluctuating capital method elaborately in the previous video. If you have missed it, I am giving the link in the card above. Please do watch the same. We mention individually because the interest on capital needs to be transferred to the respective partners individually. For example, if we have two partners A and B, we need to credit A's capital account and B's capital account with their corresponding interest. Now we have to transfer the interest on capital to the Profit and Loss Appropriation account. For that, the entry is Profit and Loss Appropriation account debit to interest on capital account. As a result, we are writing off the interest on capital to the Profit and Loss Appropriation account. The next two entries relates to adjustments for interest on drawings. The first entry is for charging interest on drawings to partner's capital account. So the entry is partner's capital or current account debit, which needs to be debited individually, to interest on drawings account. Interest on drawings is an income to the firm, so we are crediting it. Now you know when to debit partner's capital account and when partner's current account, right? So based on fixed or fluctuating method of maintaining the capital account, you will be deciding it. The second entry is to transfer interest on drawings to profit and loss appropriation account. Therefore, the entry is interest on drawings account debit to profit and loss appropriation account. The next adjustment is partner's salary. First, we should allow partner's salary to partner's capital account. For that, the entry is salary to partner account debit to partner's capital or current account, which needs to be credited individually. Next, we need to transfer the salary to profit and loss appropriation account. For that, the entry is profit and loss appropriation account debit to salary to partner's account. The next adjustment is partner's commission. First, we need to credit the commission to partner's capital account. For that, the entry is commission to partner account debit to partner's capital or current account, which needs to be credited individually. Next, we need to transfer the commission allowed to profit and loss appropriation account. The entry is profit and loss appropriation account debit to commission to partner's account. Till now, we have transferred the profit or loss from the P&L account, and we have given the adjustments for interest on capital, interest on drawings, salary and commission to partners. Now, after these adjustments, we will be arriving at the profit or loss which needs to be shared between the partners. There are two possibilities. We may end up having profit or loss in the profit and loss appropriation account. If we have profit, the entry is profit and loss appropriation account debit to partner's capital or current account, which needs to be credited individually. Why are we debiting profit and loss appropriation account? Any guesses? Okay, now let me tell. If we have profit, the profit and loss appropriation account will be having credit balance, right? So, in order to transfer the profit, we need to debit the same. Therefore, we are debiting profit and loss appropriation account. Instead, if we have loss in the profit and loss appropriation account, the entry is partner's capital or current account debit, which needs to be debited individually, to profit and loss appropriation account. Now, we have learnt all the entries with respect to profit and loss appropriation account. An important point which needs to be noted is, in case a firm suffers loss, no interest on capital, salary and commission is to be allowed to the partners. Now, let us look into the format of the profit and loss appropriation account. First, let us mark our 4 adjustments. Interest on drawings, number 1. Interest on capital, number 2. Salary to partner, number 3. Commission to partner, number 4. So, the profit and loss appropriation account will be having these 4 adjustments. The interest on drawings will be credited and the other 3 will be debited. Because interest on drawings is an income to the firm and these 3 are expenses to the firm. In case we have profit in our P&L account, it will be credited. If we have loss, it will be debited. And after making all these adjustments, if we have profit, we will be arriving at the balancing figure in the debit side. So, partner's capital or current account, this is for the distribution of profit. In case while balancing, if we get the balancing figure in our credit side, it denotes loss. So, partner's capital or current account will be credited, which is for distribution of loss. Therefore, this makes the profit and loss appropriation account. In our next session, we will be having an illustration to understand this concept. Hope you all understood this concept. If you have any doubts relating to accounting, you can write it to queries2tutor@gmail.com. Please do follow the Instagram page of our channel. The link of the same is available in the description below and in the about section of our channel. If you have not subscribed, please do subscribe our channel and press the bell icon to get instant notifications. Thanks for watching. Let's make accounting simple.